Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 29th of March. I'm Daniel Lam, your host for the podcast. In my client meetings over the last 2 weeks, many have invariably noted the resilience in equities over the month of March, especially given the volatility in the global financial sectors. To me, a quote-unquote change of hands would actually be a more appropriate description of the price action over this month, especially that in the US equities market, where the growth sectors have been benefiting from the issues in the financial sectors. So the US technology sector had outperformed the broader market year to date. While the sector saw a valuation derating in 2022 due to high bond yields, it benefited from resilient US growth data and cost control measures. In the face of cost inflation, technology companies have laid off employees and become more cautious on investments as they adjust their cost base. Tech companies are relatively less affected by raw material and input cost rises impacting other sectors. Now, we noted in the podcast yesterday that the current issues in the financial sector, even though it is unlikely to result in a systemic crisis, is likely to tighten financial conditions and credit availability, which may result in downward pressure on US economic growth. This has lessened the Fed rate hike expectations, which helps the technology sector, where long-term growth drives much of its value and is thus most sensitive to rate levels. The downward pressure on US economic growth is also likely to hurt the more old economy sectors, such as energy and materials, because of less demand for oil and commodities. Thus, investors may be rotating out of energy and material stocks and rotating into technology sector. Looking at Nasdaq 100, it has been hovering around key resistance zone for much of March. It appears attractive at roughly 5% lower versus the current level. In particular, the defensive technology stocks may be sought after by investors in this kind of volatile market environment. These are the more established technology stocks with strong cash flow or niche or stickiness in the services that they offer. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.